Hello, everyone, and welcome to the big show. This is Investing and Trading Live, sponsored by Online Trading Academy. Happy New Year, everybody. This is the first show of the new year, and we are happy to have you with us today. My name is Josh Lilquist. I'll be your host for the day, and I do have my good friend and my good pal. It's a new year. Is it a new you, Mr. Al Connickson?
You know what? I was pretty excited last year, and I'm excited this year, so I don't know that I need to come out with a new me. I'm happy with who I am, so I think I'm going to go with it.
Well, that's good.
But I'm excited not only for you and me, but doing the show is exciting on its own. But this year could be a fantastic year for people if they're willing to take that first step and do something about it.
You're always so positive, Al. It's good to see a smile on your face. And in 2022, you had a smile all year long. Let's continue that this year. And you are correct. It is going to be a phenomenal year in the stock market. And you know why? Because it's going to move.
It's open. It's going to be open.
It's
open
going to be
today.
Open. It doesn't matter which way this market goes. And we're going to talk and discuss a lot about that here today, about multi-directional trading and investing. We had a rough year for a lot of people, investors that were just buying and holding the market.
Yep.
If you had 401ks, IRAs, and they were just sitting in the markets, you probably lost a lot of money in 2022. Well, let's change that. Let's change that financial future and learn these skills and techniques to have strategies for up, especially down markets, because we know these markets have multi-directions. 25 years Online Trading Academy has been teaching you how to do that, how to trade, how to invest, whether it's short-term income strategies or longer-term wealth strategies. Last week, we kind of covered a yearly recap on the market. We don't need to do that this year. So let's talk about, and this not really forecast, but what are some of the opportunities that you're helping your students with here at Online Trading Academy to make smart investing decisions, Al?
Yeah, well, you know what? I think maybe the first thing that everybody should do is just kind of reflect on this last year. What went wrong? If you had a portfolio that didn't go well, now's a good time to kind of analyze things. What went wrong? Can you identify what went wrong? But I think for most people, it's because they made the same mistake. And many people listen to an advisor who kind of pushed that buy and hold strategy, which is hold on, don't worry about a drawdown, don't worry about a correction. In fact, don't even look at your portfolio. A lot of people were given that advice. Well, that strategy didn't work last year, and I always say this, that the only direction you can't trade is backwards. You can't go backwards and change what happened last year, but you can change how the outcome will be for you this year. And basically what happened last year is kind of a reversal of what happened the 13 years prior to that, where it was really a Fed-fueled bull market. And the Fed kept interest rates at zero. They had they injected trillions of dollars into the economy. And then this last year, starting at the beginning of 2022, they started pulling money out of the economy. They reduced the liquidity. They started raising interest rates. It was a shock to the system because people were led to believe that inflation wasn't bad, that it was transitory. So the Fed didn't start to tackle inflation until it had already kind of gotten out of control. Well, anyway, so now they're changing things. They are trying to fight inflation. They're trying to, they walk a fine line here between controlling inflation and inducing a recession. A lot of people now are pretty well convinced it will be in a recession. Not everybody, but let's consider the fact that there's a lot of really good companies out there that got taken to the woodshed last year, not because they were bad companies, but because they were in sectors and industries that required or did better with low interest rates and for their growth. A lot of companies that required credit to grow their businesses. But, some of the top companies that drove the market from 2009 until the beginning of 2022, Amazon down 51%, Apple down 29%. Facebook, which is Meta now, down 66%. Tesla down 68%. But you know what? Almost all of the analysts out there that cover these stocks still have buy ratings on them. And it may be that these are going to be great investments. But the point is, and we hammer this every week, hopefully we get it across to our listeners, that it's not necessarily the company that should dictate to you an investment or a trade, but is it the right time with the right company? And by the right time, we mean, is it, if you enter into a position, is it going to, excuse me, is it going to go in your direction? If you buy something, you need the value of it to go up. You need the price of the stock to go up in value. Can you, with a high degree of accuracy, identify that? Because if you can't, then basically you're guessing. You're using a subjective strategy, which isn't going to work. You need to trade objectively. If you're not doing that, basically you're assuming you're smarter than the market. And let's start out by saying you're not smarter than the market, and you don't have to be. You need to follow a strategy that's objective, that has a set of rules you follow, a set step-by-step process that keeps things simple for you, but is based on what factually moves price. And we know what that is. It's the relationship between supply and demand that's impacted by big institutional firms like Goldman Sachs, Bank of America, hedge funds, and people like Warren Buffett.
Yeah, just a couple of things I want to kind of tackle here, Al. You're talking about, and just some of the things that people are conditioned to think and do. And let's just talk about that for a second. You're supposed to buy and hope or hold the market, and just hold it for the long term. And you were mentioning these companies or these analysts have buy ratings on certain stocks. Well, let's just think about this for a second and just think logically. If their job is to gain assets under management, which means you giving them money, and they're always going to, a lot of times they're going to have a buy rating, so they continue to have the public buy these stocks, so they're making more money. Well, and Al made a really good point, when is the right time to buy? And that comes down to market timing. You have to be able to time that, not exactly, but in an area or a zone where that might happen. And that's what we do at Online Trading Academy. That's why Online Trading Academy is different. That's why we take these different strategies and apply rules and steps within them. That way you're making smart decisions, not just buying just because. Buy when it's time to buy, right. Just like how you buy everything in your everyday life. It was Christmas, and I'm sure people were looking for sale items. Mm-hmm. You want to buy when the time is right. If you want to see how that's done, see what that technique and concept is, it's actually our core strategy at Online Trading Academy. We have free investing classes to introduce you to these techniques and concepts, to see what is different, see what's out there. It's not new. It's just a little bit different. You can text the word investing to the number 210-210 for 2 seats for an investing class to see how that works. These are fun classes, about 2 hours long during the week or the weekend. Text the word investing to the number 210-210 for 2 seats to be introduced to these concepts. Al, we're going to continue talking about this. I want to do another market update, talk about income strategies and longer-term wealth strategies with your 401ks and IRAs. If you're online, you can go to investwithota.com to see these dates that we have for this free investing class. This is Josh and Al, Investing and Trading Live. We'll be right back.